Hello and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we are very pleased you have joined us for our Australian Rare Earths and Critical Minerals Conference. Our next presentation of the day is from Latrobe Magnesium. Please note you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for a one-on-one meeting by clicking Book a Meeting in the top toolbar. At this point, I'm very pleased to welcome David Patterson, Chief Executive Officer, and Ronan Gillen, Chief Operating Officer of Latrobe Magnesium, which trades in the OTC market under the symbol LTRBF and on the ASX under the symbol LMG. Welcome, David and Ronan.
Thank you. Thank you, Greg.
Thank you, Greg. Welcome, everyone.
So we'll get straight into it and try and keep the presentation to around the 20-minute mark so we can answer any questions that you have post that time. Just a normal disclaimer. Just to note also that all the dollars in this presentation is in Australian dollars, not in US dollars, just by the way. We're just currently trading around the 65 to 66 cents mark. So let's get straight into it. The investment highlights. Why is Latrobe Magnesium a good investment? Basically, it's the Western world's first low-cost, environmentally sustainable magnesium production. We are effectively the only people in development in the Western world, and we'll talk to the demonstration plant and what we've done already in the valley over the last 18 months to 2 years. The reason why, number of reasons, it's a critical mineral, but basically it's dominated by China at 90% and Russia by 6%. So there's a little bit of production in the Dead Sea, which is Israel, and some more in Turkey. Russia is effectively all used in Russia because, as you know, magnesium is used in the making of aluminium sheet, and therefore wherever there's major aluminium players, there's a need for the magnesium usage in an alloy. So LMG, we will be producing magnesium and other valuable products. I always say I like my feedstock because effectively it is a different sort of feedstock than what they use in China, which is dolomite, and it produces for us 4 or 5 other products, and we have a revenue stream from those products of around about 25 to 30%. So it gives us ability to compete with China on a ongoing basis and not be subject to their price fluctuations, which happen from time to time. The other major element about our product is they're all oxides. So we treat oxides that come out of the back of a power station, and that gives us a 10-ton CO2 emission walk-up start when we compare to China CO2 emissions. China produces somewhere between 21 to 40 tons of CO2 per ton of magnesium, and that just depends on what heat source they're using, that variation. We use gas, and our numbers are around the 8 for our demo plant, and we'll get it down to in our 10,000 ton plant to lower than that. So we'll get it down to around about the 4 tons, we believe. So great. We have a pretty well shown expansion path. We're finalising our 1,000 ton demonstration plant. We then move to a 10,000 ton plant, and then we move to a 100,000 ton plant. So we move up in solid increments, but in very conservative way. So we don't have any issues, and we learn from the plants before us. Compelling value proposition, we're making our estimate of EBITDA is 63 million Australian for the 10,000 ton plant. And at the moment, our market cap's around about the 100 million mark. So we recently received a letter of interest from Exxon after presenting to the American market, and that letter of interest was effectively to put all our construction finance in for our 10,000 ton plant. We'll talk about that later. So we're having a number of discussions now, of course, with strategic investors who are looking at providing our equity, which is, we say, is 50 mil. What we've done with the demonstration plant is substantially de-risk the plant process. It's a brand new process. We have it patented, as we said earlier. It's a unique process worldwide, and we've used basically the CSIRO, which is a government instrumentality in Australia. So corporate overview very quickly, we're trading around the 3.3 mark. It goes up and down because we're a small stock. And as I mentioned earlier, enterprise value about 100 mil with some other warrants out there. So a good bit of upside given the amount of money that we spent on the project. We just put in a shareholder summary there. It's pretty wide, an open register on the ASX. We have about 7,000 shareholders, and it's mainly a retail stock. We recently did a raising at 2.3 cents, and which was oversubscribed, and that's our first lot of institutions that we got in that raising. So next slide, please, Ronan. So just to give you some idea of the board and the management, people that have been experienced in building billion-dollar projects that we have on the board and in the management side of things. So we have Jock Murray, was involved way back in the SAS, in the Australian Army. He ran the SAS and has a lot of logistics experience. And as you see there, was chairman of both Hills Motorway and Terminals Australia. John Lee, who was involved with a number of major Australian listed companies. Philip Bruce was basically was responsible for project managing the biggest gold mine in Australia at one point in time. Ourselves in management, and myself as the director, as founding director, putting the whole project together. But in management, we're got very capable people, as you see there. You'll hear from Ronan later in this presentation. And next one, please, Ronan. And over to you.
Okay, thanks, David. So whereabouts are we at the moment? So we are currently producing magnesium oxide, which is the interim product prior to producing magnesium metal. So we've chosen to focus on that as this is the front half of our process. It's where a lot of our IP is. It's where our technology risk is, and it's important to de-risk that, and that's now been successfully done. We are moving to magnesium metal production, and that is a project we are now kicking off this month to finish off construction of the back half of the flow sheet of the plant, and that will be in operation and producing magnesium by April and May next year. So you can see some of the photos there that show some various sections of our process area, our production and our workforce, and where our site is located for our demonstration plant. As far as demonstration plants go, it's actually quite a significant scale. It's almost a semi-commercial scale, which again further de-risks our process and provides us a great bed to move forward. Our value proposition is downstream processing to produce metal, and that's where we are moving to. The demonstration plant really is an excellent test bed to de-risk our commercial projects moving forward, and it's extraordinarily rare that companies have this opportunity. Very few do, and it puts us in an excellent position going. And now I'll hand you back to David.
So as I mentioned earlier, critical minerals, that slide with the critical minerals is actually the DOE slide from America, and you can see that magnesium is in the critical stage and is moving up the chain. You'll find, as we mentioned earlier, 75% of our market sells into the aluminium business, about 15% into the 13% there into the steel die casting business. Metal reduction businesses, basically titanium is the big chunk of that. So what you've got is you've got the three big metals. You effectively got steel, titanium, and also aluminium. And what you get with that is the effect that anything in transport, as in OEMs cars automatically need basically magnesium. You can't make a car. You can't make a car door mainly with aluminium sheet. You make doors, bonnets, roofs, and you can't make them without magnesium. Otherwise, it wouldn't have the strength. You only put about 4 to 5% alloy into those parts, into the sheet, and what then happens is that strengthens the sheet 2 to 3 times more than aluminium. It also basically lightweights the aluminium. It's 33% lighter than aluminium, and usually in a part, because of the mass size, it gets to 40%. So it's a big benefit to the aluminium producers. We do also have direct die casting parts which you use, and all those in cars are usually the parts that take all the hits. So it effectively is the engine mountings, steering wheel and columns, and believe it or not, the seats have traditionally been those parts. When you come to defence, where we see a lot of where you're looking at those 3 main products of steel, aluminium, and titanium, you can see the uses, let alone in countermeasures, which we'll show you in a second. But effectively, you need magnesium to make any of those parts. So at the moment, there is no producer in the United States. We met with them recently on a rare earths delegation from Australia, and were received very well from all the major primes in the States, because there is no, as I said, no producer. I believe Mr. Trump signed an executive order that said by June of 26, effectively there was no more supply allowed for critical minerals from China and or Russia. So it puts us in a very solid position moving forward. Next slide, please, Ronan. Yeah, you can see here some of the benefits of magnesium for people that don't know the magnesium market. You know, that high strength, which we were talking about, the low weight, that's 33% less. When you talk about steel, it's 25% of the weight of steel and stronger. Has other benefits as well excellent for dampening effects. So, you know, they have looked at doing whole dashboards in cars out of magnesium, so you don't have to put all the parts together. You can cast it in one casting. The thermal conductivity is very good and interesting for the point of view of battery storage. They have tried magnesium batteries basically for grid storage, and that's what you see up there, where, you know, lithium batteries for grid storage can cause issues in catching a light, a lot of use. Hydrogen as well, storage, but hydrogen's a bit off. The market for magnesium usually grows at about 100,000 tonnes per annum, and that's just using the basic elements as we have there. Cars, cans have probably kicked up 10% more usage because of the recyclability of both aluminium and magnesium, 100% recyclable, and therefore, and also the plastics, replacing plastics. Very important from a defence point of view, the countermeasures. What's in the flares is an atomized magnesium metal, and that attracts effectively all the missiles, and the missiles then are attracted to the magnesium metal and then explode, so they don't hit the planes, they don't hit the ships. So they're very important from that perspective. And it's pretty similar when we talk about those electronic enclosures, because it can cut out any interference. Mostly in planes, it's the actual frames that they're used in small amounts, the actual frames of planes. And as you see there, helicopters, it's effectively used in the rotor casting. So planes mainly with, as I said, subframes, and also in the engines themselves. Thanks, Ryan. So operation-wise, I'll just quickly rip through this slide. We don't expect to make a lot of money from the 1,000 tonne. As Ronan said earlier, it's the ability to look at ironing out any issues. We will break even, if not make a small amount of money, but but we're not looking to, that's not the objective. The commercial plant 10,000 is a good producer. We talk 250 million of capex. We're basically saying with the Exxon, that's split to 50 million in owners' equity and 100 million is 200 million in construction debt. We have in Exxon an understanding at this point in time that that will be repaid over 15 years. So very good cash flow producer for us, and a very good EBITDA percentage. The international plant, of course, you get very big economies of scale when you do that. And as I said, that's the 100,000 tonner. We have looked at Sarawak for doing that in Malaysia because of the hydro power that's going to be available. We have an allocation of power. We have also a suitable site. We will be investigating, or are investigating also after the support we got recently from the US, also looking at looking at a probability of having a US facility. Next slide, please, Ron. Over to you.
Okay. Thank you, David. The point I really want to talk about here is the scalability of our process, and it's an extremely scalable process. And I'll just quickly take you through how do we make magnesium in brief detail. But effectively, what we do is we take a resource, which is a number of potential resources, ash, coal ash, and or ferronickel slag and others. We then extract the metals from that. We leach out the metals. We selectively remove other metals such as iron, calcium, and then remove silica and char. And what's left behind is a magnesium solution that we convert to a magnesium oxide in a process we call pyrohydrolysis, and we use our patented spray roasting technology to do that. And from there, the flow sheet follows the conventional pigeon process, which has been around since the 1940s, so very well understood. And we've improved, which is currently used in China, which is the major market, as David talked about. We've improved that, enhanced that. So we have improved engineering and operations, and we do it a slightly different way. And through that process, we reduce the magnesium oxide down to magnesium metal, a process called thermal reduction. And we're using ferrosilicon as a reductant, and then we don't have any molten step. It's all done from gas straight to metal. And then we produce the magnesium metal. We refine that and cast ingots. So I guess really the point I want to make going forward here is that all flow sheets going forward for stage 2 and for the bigger plant, for the US option we're looking at now, it's a similar flow sheet. And the demonstration plant materially de-risks any commercial operations going forward. To give you a bit of an example of how capitally efficient the flow sheet is, you would remember seeing the photo of the spray roaster part of the process plant. Even though we go up in 10 times scale for the next project, we still only need one spray roaster. So very efficient flow sheet going forward. So I want to talk a little bit about a bit of a novel feature of our flow sheet. We are currently reclaiming tailings as our feedstock for the process plant. We're mining tailings. And one of the really, really good things about what we are doing here in our story is that we produce no tailings or no waste, unlike conventional and mining operations around at the moment. China controls the market, and when you control the market, you control the price. Our secondary products that we produce, and I'll explain some of those now, they provide up to 30% of our revenue, and they insulate us from price movement. It de-risks our revenue. Some of the secondary products that we produce, and you can see them listed there, we produce a product called SCM, which is effectively just cement. This is a sustainable cement, very similar to Portland cement, and it performs the same, if not better, and is highly sought after by cement companies and concrete companies for replacement of cement in a sustainable way. And what is one of the hardest industries to decarbonise? We produce a high-grade silica that can be used for glass manufacturing. we produce a calcium carbonate, or otherwise known as agricultural lime. And because of our process, that contains a little bit of magnesium and therefore is highly sought after, particularly in soils that have low amounts of magnesium, which helps improve crop growth rates. We produce a char, which can be used as for heat bead manufacturing and even turned into a sustainable pulverized coal for steel mills. And finally, we produce an iron oxide, effectively a hematite. It's an iron ore mined around the world. Very high-grade iron product and can be used as a feedstock, again, sustainable for steel manufacturing or as a water flocculant, for example. Importantly about our process, it is patented around the world, and we work actively to protect our IP. And I'll now hand you over to David to finish off.
So, I mean, future global significant producer, that's what we aim to be, and also very sustainable as we drive the heat source from gas, as Rona mentioned, through to a renewable source. So that's removing that, and that gives you a great advantage when you're talking with OEMs who are all looking for the future and looking for that effective decarbonisation of the car. And we have an improved balance sheet post this year. When we get our tax rebate back, we'll pay back most of the outstanding debt that we have against that. We have looking to refresh management and the board. But at the moment, we only have four board members. Clear pathway, as I said, to commercial plants, the 10,000 and then the 100,000. And what we're looking at is getting steady state production through our MGO production from our demonstration plant at this point in time, commissioning in the first to second quarter of next year in relation to the magnesium part of it, and then moving forward into the commercial plant. And we're starting with those sort of feasibilities January of next year. Compelling value proposition, as you see there, you know, the EBITDA for the 10,000 tonne plant is looking like is estimated at 63 million. If you look at 10 times that EBITDA, you'd be talking 630 million, take off 200 for your debt, which you carry, and pay back over 15 years, you're talking around 400 odd million. So a fair increase on today's level of just simply the $100 million mark that we're talking about. And I think that's all from us at this point in time. Thanks for joining us, and we'll start looking at some of the questions that have come in.
Dave, I've got two questions here that probably we can combine into the same answer, as they're both relevant, relating to supply of US magnesium into the US. The first one, magnesium prices have declined in 2025 due to oversupply and weak demand. How does Latrobe's cost structure and product mix position you to remain profitable if prices remain depressed into 2026? That's the first one, which does tie into the second one. And I think, David, you can probably answer both. With China controlling 90% of global supply, what prevents them from flooding the market or undercutting in price if they see Western competition emerging? So I think both of those relate to where we sell our magnesium to, if you can elaborate on that.
Yeah, well, looking at in the US in particular, there has been an import tariff, not by Mr. Trump. It's an import tariff on magnesium, and it has been around for 25 years, and it goes out to 2028. So that usually is at twice the price effectively that is paid in China. And China, you're talking operating costs around $2,500 to $3,000 a tonne, and that's where they in the past have sold the price down to. We can compete at that level. That's the one thing about the operating costs, which we have in the slide, that we're afforded because of those other products. In China, you make 1 tonne of mag and 9 tonnes of waste from 10 tonnes of dolomite. We make from 9 tonnes of fly ash, 1 tonne of mag, and 5 other products, which are all saleable. And the other important thing to note, when the Americans are looking at the ability to effectively manage pricing if there is any attack from China. They're very much, the White House is very much au fait with that. They're looking at across all critical minerals, and we actually have that support in our EXIM letter. Our letter of interest actually specifically states that we would be part of that protection, if you like, from any China price, if you like, gouging or pricing manipulation, specifically said in the letter. And as I said, we know from the discussions we had with the critical minerals delegation that they are thinking about those sorts of benefits or protections for any producer, because effectively what happened some 10 odd years ago when it's affected the market greatly, and where actually the Americans are reliant now on all their critical minerals from China in most cases, and now they're changing it, as you would have seen recently, from the perspective of investing in local production and allied production, allied being Australia, Canada, and the UK, but Australia is probably number 2 on their list because of our resources capabilities. Ryan,
thanks, David. There's a couple of questions here that I'll answer relating to our production of metal in Q1 2026. You mentioned the hydromet process is de-risked, but the pyromet production is still pending installation. What's the risk profile and what gives you confidence in the Q1 26 target? Another one, what specific milestones need to be achieved before we begin magnesium metal production in Q1 2026, a demonstration plant? Now, I'll take this one. There is very low risk here from the fact that this project is already significantly advanced. So all mechanical equipment is already installed on site. All equipment is actually on site, whether we need cabling and control software is already written. All of electrical cabling's there, all piping's there and in place. It's just a matter of spooling up the workforce, construction workforce, and away we go on this project. Our construction workforce has already been put in place, and that project will be starting the first week of January, allowing for Christmas holidays. And we'll be very much on track to achieve that, considering how advanced that work already is. So we're extremely confident in that. In terms of the risks around production, as I've mentioned before, this part of the flow sheet from magnesium oxide to magnesium metal is based on the pigeon process, what's been practiced since the 40s. There is very low technical risk around that. The improvements, enhancements we have made have mainly been in the engineering and operational efficiency space. In China, for example, they put material briquettes into furnaces and pull them out of furnaces by hand. Very high risk and unsafe processing. We can't do that in the Western world for good reasons. So we use automation to do that. And that automation has already been tested and up and operational. So very low risk and very high degree of confidence in achieving the timeline from a construction perspective. So thank you for those questions. There's a question here, David. As environmental concerns and pollution control norms drive demand for sustainable magnesium, how do you plan to leverage your green credentials or to secure premium pricing or long-term contracts? Might be worth talking about that one.
Yeah, what we find at the moment is, of course, all the OEMs want it because of our low profile, low CO2 emissions profiles in scope 1, 2, and 3. Do they want to pay for it? No, but what we're seeing in the EU, for example, is basically tariff protection or tariff increases we see. And in magnesium, it's going to be brought in by 2028. It has been brought in the steel business, and it's raised to protect local steel producers against the importation of cheap Chinese steel. And it's raised the price in the EU of about $1,000 US a tonne. So there is measures all around the world at doing that and recognising, you can't import material that has a bad profile.
Thanks, David. We have a question here. The 100,000 tonne or 1,000 tonne per annum international plant has significantly better economics, 3 billion Australian NPV. What's the realistic timeline to FID and why pursue the commercial plant first? Good question to talk about our project strategy.
We're actually we're having discussions now with a lot of strategic partners about joining us with in the bigger plant, the 100,000 tonne plant. And therefore, we're very confident with the type of people that we've attracted, worldwide names, that is achievable within the timeframes. We have been working on it for the last few years, so it's well advanced, and we've got a specific plan laid out for feasibility studies moving forward. So I'll just pick up quickly. There's another question we talked about there about the owner's equity. As I said, that's been looked at by a number of strategic partners at this time, and we expect to have announcements on that hopefully early next year. So the 50 million that we need for the owner's equity plus our plus the 200 that we have from not just Exxon, but we also have been discussing it with Export Finance Australia and also the National Reconstruction Fund here in Australia. So we're very confident of raising that money without upsetting our market, put it that way, the stock market.
Thank you, David. One last question, I think, for time. Just a very quick one. Is there an ETA to fix the fan issue? And thank you for that question. That relates to our gas fan manufacturing defect on the spray roaster. That's been resolved and repaired by high quality Australian manufacturers, and the spray roaster has now been running for well over a week. So that problem's completely resolved, and we're now up and operational, producing magnesium oxide as we speak.
Okay. Well, thanks very much. If you want to join and do one-on-one meetings, as Greg said earlier in the interview, that's possible over the next few days. That we made ourselves available, either Ronan or myself. So if you want to take it further, by all means, be in contact with us directly.
Thank you very much for listening.
Thank you.